Taxes are crucial for development. Unfortunately, today's developing countries are constrained in their ability to raise taxes. Here are some insights about various policies to help governments raise more taxes. The first lesson is that information is really key. Third-party institutions employ a large number of employees, and they also transact in numerous ways with firms. Similarly, financial institutions, large banks, for example, have numerous transactions with individual clients. They have accounting records about exactly what it is that firms are doing on a day-to-day basis. Evidence from several developing countries shows that when the government has access to this information on the activities of firms and households, they are able to raise taxes. Value-added tax, or VAT, is a powerful tool to raise revenue and, contrary to conventional wisdom, is also redistributive. Sales tax is self-enforcing because on the one hand, the seller for a particular transaction will want to underreport the value of that transaction. But on the other hand, the buyer will want to overreport the value of that transaction. Differences in incentives means that the tax authority is much more likely to get an accurate reporting of the value of that transaction. Wealthier households are much more likely to shop in what we call modern stores, large stores, where the value-added tax is levied on individual purchases. And in contrast, poorer households are much more likely to shop in what we call traditional stores that are largely informal and do not bear the burden of the value-added tax. Enhancements to administrations can both directly lead to more tax collection and can also indirectly help to enhance the effectiveness of other policies. Personnel reforms, such as changing the structure of pay for tax officials, can enhance the efficiency of tax collection. Evidence from local governments shows that investments in technology can not only enhance the amount of information that are available to governments, but can also provide better ways for tax collectors to work in the field and make the collection process much more efficient. The fourth lesson is that tax morale matters. Tax morale is the set of beliefs and attitudes that citizens have about taxation and the tax system. And there's rigorous evidence showing that actually increasing the supply of public goods and improving the quality of public goods leads to more tax compliance. Governments in developing countries have implemented public shaming or public reward programs. And these kinds of policies can help build a sort of culture of tax morale where it's widely accepted that paying taxes is the right thing to do. There really is an important need for evidence-based policy design. Going forward, the aim of this evidence-based approach is to foster a culture of learning within governments and to ensure that the design of tax policies is firmly rooted in evidence.